All right, everyone, here we are with another video with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. And it helps out the YouTube channel. I appreciate it very much. And let's go ahead and jump into Zomedica Corp's analysis. So here we are with ZOM stock. And ZOM stock has been going downwards after hitting a peak here of $2.75. Now, it almost reached $3 and quickly just started to fall throughout that day, right back on the 16th, and started to fall all the way back down to 194, 195, jumped back up to 228, has been pulling down, and it's just been very volatile, but we're seeing some consolidation right here and some strength above the 190 mark, right? You could see that there being the low. And one thing I do want us to be aware of is the fact that this was all about the hype and speculation of the TrueForma medical device launching. Everyone was expecting it towards the 30th, 31st, and the end of the month. And then they decided to just do their first sale announcement back earlier around this time. And that's why we've had this pullback pretty fast. Now, a lot of investors are either in this one for the long haul, or they were just trying to ride this out for the hype. And some investors right now are a little bit disappointed on their expectations for the whole TrueForma catalyst and the Zomedica Corp stock overall. Now, TrueForma has a chance to give Zomedica a better outlook when it comes to institutional investors and even retail investors that are trying to go in heavy if their revenues go up. If revenue goes up, naturally the stock goes up. I do want you guys to be aware of that, because the higher the revenue, the higher the chances of net profit. Now, just because revenue goes up doesn't always mean a stock is profiting, and that could be a bad sign. So you always want to think about revenue correlating to the possibility of more profit. And if revenue is going higher and profit is not rising or becoming positive, then that is a red flag. So one of the best ways to know that a stock is growing is because of revenue growth and net profit growth, or net profit is turning in a positive direction. That's why earnings are so important. A lot of investors look at earnings as like, oh, just a temporary, jump in, jump out. I'm going to just play it by the earnings. A lot of people are waiting for the earnings call. A lot of people just want to play stocks based off of earnings. And that's cool. That's one strategy. That's a short-term strategy. But long-term, you want to look for stocks that not always is beating earnings, because that might be impossible, but is near those earnings estimates and still staying positive. So if earnings is missed, right, that their financials in the quarterly is showing positive revenue and net income. That's like probably one of the most important things. So the way a stock grows is by obviously more investors buying shares, but most importantly, by revenue growth and profit. So with this TrueForma medical device, Zomedica is going to be able to have a chance to prove themselves and show the public, right, that they are profitable. That is the end goal here. And that's why a lot of investors are like, well, Zomedica has an opportunity here to become profitable and has an opportunity to hit $2 to $5, right? We're sitting at $2. And then they're like, well, there's room for this to be sitting somewhere between $2 to $5 in the near future. And if revenue really grows, this could be on its way up to $7 or $10, right? Those are all possibilities. So let's go ahead and look here at our support and resistance. But I do want every single investor and viewer to be aware that, yes, the TrueForma medical device was expected towards the end of the month. I don't know if there's still going to be some catalyst towards that time. That could be a possibility. But right now, the stock is just showing strength above 190, showing consolidation. And we saw a high here of 275 recently. That definitely needs to be broken through to show some growth momentum and potential. So let's see here our 50-day moving average. It's 206. Anything below that is bearish. Anything above that is bullish. If that gets broken through, the next resistance level is up here at 214. But we got some other numbers to look at before looking at that point. We're sitting at 201 and resistance is 202. If that gets broken through, it does not signify that the bulls have gained control, but it is an indicator for us investors to know where this is heading, and it lets us know that the momentum is starting to build itself up in the upward direction. It's the first step for the bulls to continue upwards, but doesn't guarantee that the bulls will break through the 50-day moving average of 206. It's just a stepping stone to get there. Now, our support is 199. If that gets broken through, super important to watch closely because we're falling back down into the $1 range, and the lowest point most recently reached was 190. So you want to watch how it's reacting between 199 and 190. Are the bulls trying to reappear and bring it back up, or are the bears tearing this one down fairly fast? Super important to watch this closely and see how the stock is reacting moving forward. But when you zoom out, there's some consolidation right here, but at the same time, you could see the downward movement. We'll have to see if there's another slight spike and pullback. And if it continues that downward trend, it is going to be something to be mindful of and watch closely due to the fact that it continues to hit newer lows. And that is something that you want to be aware of. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watch this video. Stay tuned to the end because I have a ticker symbol you won't want to miss, and you definitely want to have it on your watch list. Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. And all I ask for in return is for you to smash that like button to let me know you watch this video, and stay tuned on in for all that we have to cover. Let's jump right into it. So I have here the website to ChargePoint CHPT stock, and I definitely recommend every single viewer and investor to go check it out. It'll tell you much more information on the company, but I love their slogan right here. The electric revolution is here, and that is so true. It is here. It's just getting started, and you want to be aware that when you're investing in the EV sector, whether it's the cars or the charging stations, you're investing in the future. So it's going to take time to see your returns really grow to their full potential. Now, a lot of investors will look at this chart and say, well, we're sitting at $24 and it hit a high here of $50. Yeah, it hit a high there because of the speculation and hype because of the merger. This is a SPAC merger. You always want to remember that. But Charging Point has an opportunity to get a market share and a piece of the pie of the bigger picture. So I mentioned this one over at the Patreon this weekend, and this is what I said. And if you guys want to know what stocks I'm watching weekly, you can join us over at the Patreon. It will be down below, the link in the comment section. It will be the pinned comment that I'll have there down below. So I basically said everyone focuses on the EV car makers, but forget to focus on the source that can give the EV cars the fuel and drive it needs to perform its purpose, which are charging stations. ChargePoint is one to watch, especially that we saw it in the most recent pullback, how it reached below $20. It reached $19. I posted about a snapshot of the chart, which you can see up here. If it can reach below those numbers or touch them again, it will be something to pay close attention to. ChargePoint is not the industry leader, but it will get its piece of the pie when it comes to the market share in charging stations. Okay, that's going to be a big deal in the future. This is the future gas stations. You always want to remember what is going to give the fuel to these EV cars, and it's these charging stations. Yes, you can charge from home, but charging stations will charge cars much faster, and as batteries get more improved and developed, they're going to become so much better that you can actually stop at a charging station and not feel like you're stuck there for 30 minutes, 40 minutes. Now, this is my question to those of you that own an EV car or know someone that owns an EV car, and I want to ask you guys, how dreadful is it to stop at a charging station right now in these times? I know people that have stopped, and then they do like little, stories on their Instagram or Snapchat, and they go ahead and they post, man, we all hate ourselves, or like they post something like just being sarcastic, and it's a whole line of Teslas at a Tesla charging station just waiting for their cars to charge, which takes about 30 minutes to 40 minutes. When charging stations can start charging in 5 to 10 minutes, it's going to change the game. And not only that, but people charge at home because they have time to charge at home, because they go to work, they come back, they leave it charging overnight, and at some point that's going to get kind of redundant and it won't be necessary anymore. When charging stations will be out there, you can just stop and get your 5-minute charge, and it's going to give you enough for the next day or next 2 days instead of charging slowly at home. And it's just going to be a shift. There's going to be a transition once batteries get improved, charging stations get improved, and the time becomes less and less. It's just going to be so much more convenient than having to charge overnight. And especially if you're traveling, it's going to be so much more convenient. So that's going to be a big deal. ChargePoint is going to have a piece of its pie. So definitely check out the website. That is one thing I do recommend, so you could see everything about it. And I also want to pull up here another picture of a screenshot that I took. And a lot of people would probably be a little bit concerned about their financials. And that's why I stated earlier, this is where you need to realize that you are investing, right, in the future. And ChargePoint is an electric vehicle infrastructure company based in Campbell, California. ChargePoint operates the largest online network of independently owned EV charging stations operating in 14 countries and makes the technology used in it. So, I want you guys to be aware that they're the largest online network, but they're not the largest charging stations, okay? There's other companies that it's competing with, but like I said, it's going to get its piece of the pie. The financials right now will never look so strong because, like I said earlier, how many people do you guys know that feel that dreadfulness when it comes to charging their cars? Now, my other question is, how many people do you know that own an EV car? Do you own an EV car? And that's where you got to realize that you're investing in something that hasn't even maximized its potential yet. It's just getting started. So this is the time to start watching this stock. I mean, the closer it gets anywhere below $20, the more attractive I believe it looks. This does have potential. We already saw it reach up to 50. It can, for all that, it can probably break out through that in the near future. But, you know, one thing is you need to be prepared to always believe that you're investing in the future. You're not investing in now. You know, you got to think about how many people own cars and how many people need charging stations right now. But then you also got to think, well, how many people will own EV cars and will need charging stations, not now, but later. And that's where you're going to find out why this has so much potential. And this is definitely a stock you need to have on your watch list moving forward. As always, guys, thank you guys so much for watching, and let's make some money.